Hello, everybody. It's JD. I want to talk about kind of some. I'm going to deem this as like a stochastic masterclass. This probably looks insane right now, but trust me, there's a method to my madness, and I want to go over. I basically want to talk about uh, the idea of merging two stochastic indicators into one. So basically, using the regular stochastic with some adjusted settings that help mimic the price better than just the way it's set up stock on TradingView when you load it up, and with the normal stochastic RSI that you may be using on your charts and already. So I think this, hopefully at the end of it, you'll come away with maybe wanting to overlay it on your own chart. There's a separate video of how to make those adjustments that I'll be including with this. And the goal is to, you know, to slay it, to kill the game, get more confluence and of bigger moves. I think that by joining these two together and looking how they flow together, it gives us bigger moves. Whereas the stochastic RSI gives us moves, obviously, but sometimes they're less in and we don't have to take every move. We could just wait for the bigger moves. That's just one idea you could do with this. Or if you wanted to load your position size up a little higher when you have all of the confluence when they join together. It's just, there's many ways you can do it. This is not financial advice. It's just something that I notice and have been noticing for a long time. That's why it's overlaid on my chart. I wanted to give a breakdown and how you can do it yourself. Okay, so I'm going to slide this over here to the far left. We're looking at the TRB coin right now, and we're following it on the Binance chart just because there's more volume there than on the KuCoin chart. Sometimes, so it gives a good representation of this. So I pulled these all over to the side just so we can talk about. Looks like there's just not so much noise, like decluttering our brain, cluttering our brain, should I say? Okay, so right now what I have here, if you can follow my cursor, I put this little highlighted thing on there. It's kind of nice. This is a regular stochastic, just kind of loaded straight of the out of the box from TradingView. And so we're going to go over here. We're going to look at the regular stochastic, and we're going to basically, let's first move this to the above pane. We want it to kind of look like this one's already been adjusted, my top indicator. I have a few things going on here. I kind of call it my master stochastic indicator, and I have adjusted settings for that. We can talk about that, but right now I want to show you how you can get that yellow line to look like this, and why I like to use it in conjunction with the stochastic RSI. So what we're going to do is we're actually going to go into the settings here, and we're going to change the K line to yellow, and we're going to change the D line to yellow. This will also be in a separate video just so it's nice and easy to find. And then we're going to change this to, so if you look at it right now, this, before I make this adjustment, this stochastic looks almost just like the stochastic RSI. But I mean, the stochastic RSI has more movements in it, but there's a difference. Like a regular stochastic is measuring volume and price of the movement, whereas the stochastic is RSI is measuring the stochastic of the RSI. So there is a big difference in, I mean, it's not big, but I mean, if you look at the stochastic RSI and the RSI, there is some different movements, but it's basically, I just want to make sure that everyone understands that the regular stochastic is different than the stochastic RSI. I mean, they look similar, but we can use this to make some adjustments. I want this to look, see how this yellow line, it kind of looks more like the price above. It looks like it's flowing more, and right here, when price spikes up, it kind of rounds out, it peaks out at the top, telling us, hey, this is get out time, And this, I just feel like this yellow line that I have adjusted kind of follows a little bit better the price above. Like, look right here where the the price went up, it dipped down, popped up, came back down. On the regular stochastic and the stochastic RSI, it kind of, the stochastic RSI followed it well, but the regular stochastic didn't follow it as well. I mean, it kind of did, but it didn't. There was a lot of jumps in it. So this one kind of smooths it out by adjusting the smooth. And look at all this chop, 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 chop. And then here, chop, 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 chop. And this just kind of like follows the price. What it was actually doing, it was climbing. So this is a better example than the one right here. And it doesn't always work. All these indicators don't always work. But look at all of this chop and this noise in the stochastic RSI, whereas this yellow line just kind of flows and it just kind of mimics the price better. So you want to adjust your settings to basically mimic the flow of the price. And so when it gets high up here, it's kind of telling you, okay, we're at the max. Like, it's not going to last forever. It can stay up and we can get moves. That's when we look down to the stochastic RSI, which we're going to talk about with all those lines that you saw in the beginning of the video. That can be a tell when the yellow stochastic is pegged to the top and we're seeing oscillations in the stochastic RSI. That can give us little pump moves, like right here for an example. Boom, this goes down while this regular stochastic is staying high. This kind of goes down, and boom, we still get a move because it didn't really fall below the 50 line. It didn't really, or the 0 line. So let's adjust our stochastic. We're going to take the K length and we're going to turn it to 40. So it's looking at 40 candles back. We're going to smooth it to 4, and we're going to do 1 on this. And if you notice, it kind of pulls them together into one line, right? There's a little bit, or actually does it all right there once you adjust the settings. So it looks exactly like this one does above. Now what we're going to do is, since my stochastic RSI is right down here, we're going to click these 3 little dots. We're going to move to existing pane below. Now we have a very similar, you can just do this yourself by just doing exactly what I did, adding that stochastic, adjust the settings, and put it to the stochastic RSI. It looks very similar to the chart that I have going on up here. The other thing that I have on this chart, just while we're here, is called a stochastic MTF. It's in the searchable indicators, and then I adjust it. I really only want the buy and sell. I take off the big stochastic and the stochastic D, and I only really want this buy signal strict criteria on the bottom and sell signal strict criteria on the top. And then I set my alerts to that. Like, it's kind of just an easy way. Like, say if I'm tracking a coin, this TRB has been moving quite well over the last week or two, and so I just want to track that coin. I want to track its movements. Maybe I just want to scalp on one thing. Like, you can use this on Bitcoin. Some people just only trade one asset and they just scalp in and out. They just catch the longs on a 1 hour chart. That's more of a day trading idea that could be done for this. So I just like the visual representations, and it's giving me multiple time frames of the stochastic. So when they get below, when they conjoin, then they throw me signals of buy and sell signals, and I just use those to set alerts, mainly, or just as visual representations. So basically, getting back to it, we're going to close this down here. So you have now your own indicator with the regular stochastic RSI going on with this adjusted stochastic setting. And we're gonna now zoom over back to where we were, and we are going to take a look at, we're gonna kind of just diagnose this whole thing. My computer's moving slow. I apologize. It's really bogging. Let me actually plug the fan in on it. Okay. Come on, baby. Taking his sweet time. Feeling kind of hot. Okay. Anyways, we're going to keep rolling this. These videos bog down your computer a lot, even if you got the best computer. Okay. So right here, we're going to we're looking at points of confluence. Let's go ahead and move this pane above here. We want that one to be at the top because that's the one that you're going to use the most, you know. I still have my moving averages on there and my RSI, and of course you can join all of these together to give you stronger points of confluence to have more conviction in your trade. Right now, mainly we're talking just about stochastic. Okay? I really apologize, my computer taking so long to drag over here. Very strange. Okay, so we'll start right in here. This shoot, I gotta get that down. So we will see here. I had a red one over here. I'm gonna start out the gate, you know, showing you that nothing is perfect. But look how far. And I mean, this is a fail where when they both joined together, we did not see a big push. But one thing that you can look at, it's like this stochastic RSI went up here. Stochastic RSI went up, but the stochastic regular stayed low. And it did not, this like was a failed oscillation. Like, and you might have, if you were just trading stochastic RSI alone, you might have taken that trade and you would have got nothing, you know. And this stayed down for quite some time. This was like not much of a move, you know, and none of that. Whereas you might have been like, well, what's going on? Why am I not hitting on that? So this one stayed down. So, but once it joined back together, you know, that's one of those things. It's like, this is like, it's been down for a long time now. This is a period of probably a day or two. The stochastic has been down really long. One of these times is going to hit, and you know, so this is kind of an anomaly. Like, you know, you don't really know what to do there as a trader. I mean, you could have been in this and it oscillated up, and you might have been like, oh, you might have just got stopped out right here, and then you notice, oh, the stochastic RSI is like hanging really low with it, and it's joined in together again. Like here, it didn't really hit it all the way down. Got close, but this one it dipped below as well. So they joined together. Now, if you had entered in right there when they joined together on this green line, it's actually right back here, this green line here, you would have made a profit of, after, you know, up to here. If you could have gotten out there at the stochastic RSI, you wouldn't have made that much. You would have missed a lot of the move. But if you look at this and you say, well, the stochastic, regular stochastic is still trending up, it's still trending up. And if I would have taken that to where it gets all the way to the oversold region, that would have netted me a profit of 21, 23%, something like that. I'm getting lost in my, sorry. It would have been a 12 to 13% move. But then what's interesting is this whole thing, we're going to spend a little time in this area right here, is the stochastic is now staying high. It's coming down with the stochastic RSI, so you could have taken that trade there as well, and it, you know, with the stochastic staying high, you could have netted that up to there, and there would have been a profit there. But if you look at it too, the regular stochastic is kind of following the price, that it's wanting to stay in the trend. It's wanting to stay up. Like here it was down, it kind of wanted to stay in the bear land. Like it was pushing down, it had more to go. But here it's staying up, and it's saying, well, we got more to give, more to give, more to give. And then that's when you can look, these white lines are the moments when the stochastic RSI was down while the regular yellow stochastic was up. You know, And so those can be pushes too. Further, you could look at these almost like continuation patterns. And so here, if you had taken that whole move and stayed up while the oscillation was down and played the RSIs, the stochastic RSIs, along with it and rode it all the way to the end, that would have been a 42% move. That's just one way you could trade it. That's some weird anomalies in it. But the idea is that when it joined together, there was a bigger move. And when the stochastic was down low, and I'm talking about the regular stochastic, not the stochastic RSI, there's a bigger move. So you can almost use the regular stochastic as a tail of like tops and bottoms. So here we go. It came down here, and this is an idea where we didn't get much. I mean, you had that wick up. If you were to measure that wick, you know, it's a 26% move. But you probably, I mean, maybe you hit the wick, maybe you didn't. If you had a, you know, if you had a target up there. But so that was a push, you know, whereas, but we didn't get much of a push there. It was like a 10% move to the top of kind of like where the stochastic RSI is meeting there. And I had that red one there. I feel like that red one got moved. Sorry, I made this chart and then I moved things around. Oh, that's an example of, no, I'm not seeing exactly. I apologize. That red one there, it's kind of just showing that it wasn't that big of a move. You know, I think that's what I put that one on there. But still, there was when it went down, that was a 12% move. So then you go here. This is coming on down, and this one, I think the red one was supposed to be kind of here. It's like this isn't. It's down, but it's really not that big of a move. You know what I mean? Like it's minute. You know, like again, I said nothing is perfect. I'm pretty sure that's where I was supposed to have that red one at. Okay, because like, look, we got a pump, and the stochastic RSI pump, but we didn't get. That wasn't much. It was only like a 5% move, maybe, or something like that. Man, I can't believe how slow my computer is acting with right now. This is so strange. I tell you, I've been trying. This is the second time I made this video. It's driving me nuts. Driving me nuts. Yeah, it's a 12% move. I mean, it's something. It's 11%. So you could have hit it there. It's not really a failed deal. I mean, it's an 11% move where they joined together. Okay, so then right here, they join together again, and we wait till the stochastic gets to the top, and we get a 32% move. Whereas if we got out right when the stochastic RSI got up high, we would have just made that little bit of a move there. So the stochastic gave us 32%, whereas this only gave us probably 5%. Okay? Now, again, the stochastic is pegged up to the top, and the stochastic RSI falls down, so that's why this white line is here, and boom, we get another continuation. Now, this price here is showing you that there was a wick here, that from here, if you had stayed in it all the way and hit that wick, it went up 110% to the very end of this stochastic here. And so when something goes parabolic like that, look how far it got away from the 21-day moving average. You're going to usually see some sort of a downtrend. So then we have this falling down. This is a stochastic. Man, I swear this thing got moved on me. Very, very, very strange. I apologize. This white one here was, it's when the stochastic RSI is down, and you might have taken that trade. But the stochastic yellow one is coming down still. It's still saying there's a good chance we got, like, if we were just right there in the price, there's a good chance it's got more to come down. So that could have been a tell, especially after such a parabolic move. It might not just be ready to pop again, but that it was hitting the 21, and like we might have taken that trade as a pump up, but it was right after a huge wick. So we wait till the stochastic gets all the way down, and we wait till we get there's where a stochastic RSI is down, and the yellow stochastic is getting close. Doesn't give us much of a move right here. When the stochastic gets all the way down and the stochastic RSI is kind of almost down together there, we get an 18% move. Boom, to the top of where the stochastic, regular stochastic, is telling us to get out. 18% move. The white one again is the stochastic RSI is down and the stochastic is kind of high, gives us a 12% move. The green one moving over, green one here, stochastic RSI is down. Oh, that gives us that 12% move I was just talking about. Stochastic RSI goes down all the way, we get a 13% move. Stochastic did not come all the way down. We wait till that. Also, it's really good at calling tops. The yellow is really good with calling tops and bottoms. Right here, they join together. It's like kind of the money. We're looking for this right here. Boom, boom. And this gives us a 28% move, and fast. There's just, the whole point of this video is that it's stronger when it joins all together like this. That is a beautiful example right here of when you're going to get the bigger pushes. Okay? Here, they all join together, but like not at the same time. You know what I'm saying? Then it's like just the stochastic was going down, calling the bottom. And you could have, that would have been hard. Honestly, that would have been hard to ride that all the way through, unless you're looking at larger time frames, because these oscillations will be present on larger time frames as well. Okay? So this comes down, and this is back testing. We're just back testing theories right now. We're just playing, and we're like having a master class. So this comes down, the stochastic RSI. You might have wanted to take that trade, like right here, but this yellow didn't happen, And so this would have been an example of where you might not have got much. You could have got in right here, which would have been right there, but then you would have still dipped quite a bit. If you wait for it to get here, stochastic comes down, then you get more of a move, like something like 8%. But we didn't really have the stochastic all the way down. So you get another little oscillation. Here's a white oscillation again, or a white line where it shows the stochastic RSI is down, but the stochastic is not high. You don't get as big of moves, I feel like, when the stochastic is midway and the stochastic RSI oscillates down. And it depends on how deep the stochastic RSI goes down as well to some of these moves, like this one here. It just depends. Like the deep down it gets pegged down there, the better possible movement. So we're waiting again right here. We get kind of like this crossover, like the stochastic is down and the stochastic RSI is down, and then we get this 40% pump. We're also hitting the 200-day moving average right there, like a beautiful, it started riding along that. And we had the stochastic down, another sweet spot area of like, okay, we got other points of confluence here. And that's a nice thing to see. And then look, stochastic goes up. Stochastic RSI at the top would have got you out right here before the pump. But the stochastic told us where the top was. This smoothed out, adjusted, because it's mimicking the price better because we made those adjustments to the candle length and the smoothness. So it kind of just shows you the price better. So we see again here, stochastic RSI got down, and if you would have taken that and hit, I have this here, there was a wick. I mean, it was a fast wick, and maybe you would have got out at 12%, but that was within the hour. So, but the stochastic the regular stochastic was showing you still like we're not pegged to the top. Because if we're pegged to the top and we see those stochastic RSI oscillations, that's a good sign of continuation. But we're kind of like teeter-tottering in the middle land. We don't know what's going to go down. Well, this thing had more to move, so we're like, okay, well, maybe I'll just wait. I had a big run up, 40%, great. I could just chill out for a bit and wait till the stochastic gets down there, and then it triggers one of my cells. And then so when it triggers one of my cells on the multiple time frame stochastics, then I can go and check out the chart and see what I can zoom into the 15-minute, I can zoom out to the 4-hour, I can see how do I like it, you know. But so here they all join together, boom sauce. We get a 23% move to the top of where that is. Not as big as the others. And so like right now we're kind of looking at it now. Well, the stochastic is kind of high, and so is the stochastic RSI. We're in the top of a rising wedge. It could break out parabolic. It very well could. We have a couple targets here because we basically broke support and resistance here. You can kind of slide it down to there, use that as support, and we came up, we ran down, we hit it, came down, ran up, broke through it, and now we did an SR flip, and now we're sitting at the top of this channel here. If it breaks out, you look to larger time frames to see where it's at, but it could very well pop down into this rising wedge and fall back down, and wait for the stochastic to come back down. These are all just things I'm looking at. Hopefully this, I apologize, it's a long time or a long video. It's 26 minutes. Hopefully you got some great value in it, and you want to add this. You see the value of adding this smoothed out stochastic to your stochastic RSI so that you can get more confluence, more conviction in your trade. That's what it's all about. That's what we spend all these hours and all this time in the charts for, is to come up with our own system and come up with just things that give us more confluence. So thank you very much for listening, and happy trading out there.